It's not a good start to the year.
It's not the best, is it?
Yeah. What's happening?
I think there's still a lot of confusion, people pricing a lot of expectations, let's say from a policy perspective, a lot of question marks over the Chinese recovery still. So I think it feels like we're treading water, not drowning, but still treading water and just waiting for some kind of move in one direction.
Outlook 2024. Let's start with Asian equities as a whole.
I think it's going to be challenging. I don't think we're going to see a broad-based recovery. We've got a lot of elections.
Yeah.
The macro data is still very, very mixed. I still think, I know I'm very alone in this space, but I still think China does look like it's an attractive market. I mean, a lot of people have discussed the challenges. The risks are so well known. Again, it's not going to be a broad-based recovery, but from a company-specific perspective, there are a number of opportunities. So, if you had to say which market is likely to outperform this year, I still think it's going to be Chinese equities.
Okay. On an index level, you think?
On an index level too, just because it is just so incredibly cheap. So unless the whole thesis around China is completely destroyed and void now, so many companies are trading at such cheap valuations.
The people that you speak with, I mean, cheap valuations has been a reality. We've been contending with anyway for the better part of the last 2 years. Do you get a sense that people are softening up? Foreign investors are softening up their stance on China, exposure to China?
It felt a little bit that in terms of sentiment was somewhat incrementally improving towards the end of last year, but the jury's out at the start of this year.
Okay.
So I think what's key for China is to continue to implement policy in terms of supporting measures, whether it's got to do with property, really being very transparent about any outstanding debt. But the companies that we're finding very attractive, I mean, they have pricing power, their earnings visibility is there. So even in this kind of challenging market where confidence is still a bit mixed, they're still doing well. And so if we do see a market recovery or an economic recovery, they'll continue to do well.
The old adage of, align your Chinese equity exposure to policy priorities, how does that look like right now? What sectors would you like going into this year? Well,
time and time again, there's this reiteration about being innovative when it comes to China, high-tech, biotech. So all those areas are very, very interesting. Another new area, which, very fascinating, people don't talk about it so much, is agriculture.
Oh.
Yeah, so because, again, there's this big focus policy-wise on the agricultural sector. And let's face it, with the consumer, whilst the data is mixed, you're still seeing households being very well off relative to other households around the region.
Right.
And so it's just that level of confidence that needs to pick up. And again, this is really going to be driven probably by confidence in the property market.
What about regulatory risk? And we had a reminder of that before Christmas with that, the draft rules on gaming, and then they reversed course, and then you had a report that the person got fired. I guess the bigger question there is, do investors in China still need to, are they still faced with significant regulatory risk? Is that premium still baked in?
I think you have to factor it in. And we've always said that policy direction, policy implementation is really, really crucial. It can benefit companies. It can also, sort of stop or prevent margins growing for companies. In terms of the regulatory risk, we're probably past the peak. So again, it's all about just monitoring the consistency and alignment of the policies and the messaging around those policies.
And you don't think there's enough clarity at this point in time, or the clarity that investors need at least? We haven't gotten to that point yet.
It's definitely improved, and again, there's this increase in sort of coordination. We just need to see more and more of that.
Broadening out the view, one of the big winners last year was Japan. I think right now it's reopening. We reopened lower on the topics. I think we've reversed losses. Can we show that graphic, guys, if we can? Well, what's the 2024 story in Japan? That's up 25–30%, this index last year.
So, the macro story is still a bit mixed. So we talk about the consumer confidence levels in China being a bit dire, and we're not seeing stellar consumer confidence in Japan. And in fact, a lot of tourism is benefiting those Japanese numbers. So the data's still mixed. We still don't know what the BOJ is going to do. But from a corporate perspective, that positive trend we saw last year in terms of minority shareholders being rewarded by companies, that's likely to continue. Now, last year was very much underpinned by large cap value stocks in Japan. So if you look at the opportunities, whether it's in small cap, turnaround areas, semi companies who export to China, but their valuations are so low because they're just a beneficiary of China. And then just from a sort of a more recognizable perspective, Japanese food and beverage companies are gaining traction with overseas consumers and demand, and their brands becoming well known. This is what the Chinese companies are also doing, whether it's consumer or industrial, in terms of diversifying not just the domestic demand story, but also the offshore demand.